Everybody, and welcome to Trading Analytics. My name is Nick Groves, your host here for today's episode, and we have a lot to talk about. Now, unfortunately, we got some terrible news yesterday about Iran firing drones and ballistic missiles at Israel. This is a retaliatory attack because Israel hit Iran's two big generals about 12 or 13 days ago. So this is their retaliation. Fortunately, Israel did seem to deflect 99% of those missiles, rockets, and it looks as if the U.S. will not take part in a retaliatory action against Iran. This is good news because we just don't want to see things escalate further. How Israel responds is really going to be the big talk the next few weeks. So just pay attention to that. Now, yesterday I noticed that the markets were projected to gap down roughly 1%, at least in the Dow. But today, as I'm taking a look at it, it's around 0.5%. So, I'm not too sure we're going to see some huge reaction. Now, if things were to escalate further, that's a different story, and we're going to be updating you throughout the week. But for now, that's what we're looking at. Hopefully things slow down. I also noticed that in Bitcoin, I'm just going to point Bitcoin out really quick because it's the only thing that runs on the weekend. But on the news, we actually moved down 9% or so in Bitcoin, and you can see we've bumped back up slightly. And so hopefully things aren't going to get too crazy, but we still had a crazy week. We have a lot to talk about. So let's talk about the S&P 500. Now, if you guys have been following me, you know that I've been bearish equities for some time. A lot of that has to do with where rate projections are and how the market just has not cared about us going from, 6 cuts at first to now 2, maybe even 1. But what you can see right now is that the equity market is creating somewhat of a bear trend right now. You have a high, a low, a higher low, a lower low, higher low, lower low, higher low, lower low. So this is moving downward. Now, I've showed you guys the other week how, the support in the S&P is going to be around 5,100. It looks as if we've came down there and gotten pretty darn close to tagging it. And, that is also the 38.2% retracement of the 2024 range. Now, the 38.2% fib retracement, for those of you that don't know, is really the continuation fib. In a strong bull trend, you want to see it come down there, tag it, and then actually resume higher. Now, we might gap a little bit below there, but although I've been bearish, I'm starting to kind of shift my mindset a little bit, and let me explain why. The Dow Jones, this is the YM futures, has already moved down quite substantially. Now, it might still want to go down and actually touch the 38.2% retracement of its overall range. But from a 2024 range, this contract has already moved down quite substantially. It's already broken the 618. And just to show you the cash contract, it's actually, so it's moved down 5% this from the highs. So that's a healthy correction. And that's really what you want to see in a bull market. You want to see things correct and then resume. Now, if we decide to move lower, I think we have massive support for the Dow at 37K. This is the 38.2 of from the October lows to the all-time highs. I think that this will be a large area where buyers would step in the event that we continue to trade down there. But just so you note, if we got down there, we'd actually be negative on the year, which would make things quite interesting. But aside from the Dow coming into some support in my eyes, or potential support here shortly, the Nasdaq has just remained extremely strong. We did actually break down from this ascending channel that held us for all of 2024. It back tested it, I guess, a few times and has rejected it. Now we really need to see a break below 18K to get excited in the Nasdaq. But what I will say is that this market has just been so relentless. We had a hot CPI the previous month. We had another hot CPI, and we saw that crack down this past week, but it's still holding support. And that's a concern for bears, right? You really need to see it get back below here, and then as far as just the 2024 range, you're going to want to see it probably come down to the 17.5 level. That's an area where I think bulls would step in, but we might not even get there. And like alongside the Dow, just looking at the equal weighted S&P, we're actually at the 50% retracement of the 2024 range. So, we could be coming into an area where buyers actually step back in. And another thing that's making me feel like that is that we've seen the US 10-year. It's been on a tear lately. But that being said, from the October highs to the lows, we're actually up at the 618, and we're also at channel resistance. Now, if rates decide to move lower from here, I think that would help equity markets, and we could also see the dollar actually slow down as well. Those of you who have been with me, I've been, short the euro and the cable for some time, but I'm starting to get pretty hesitant about that. One of the reasons why is that we're at the 786, and if we pop up a bit higher, it would still be making a lower high actually from October of 2023. And outside of us hitting some resistance here with this fib, I think we're also getting quite close to some other extensions. For instance, this 161% extension comes up at 106.59. This is my target. This is where I think we're headed. Given what happened over the weekend, how it's already in a bit of a squeeze, we could squeeze just a bit further. And where that squeeze might take us in some of the other contracts, like the euro dollar, is actually on a move down towards 106. But that 106 level is also the 786 of this big range. So I think that if we get down there, we might see some buyers step in despite how weak the euro's been and how strong the dollar's been. I think that, in the news at least, you're seeing things come out like, the euro at 5-month lows, talking about parity. It's a good time where, people start selling it and they just get turned around, right? So that's something that's been on my radar as far as, rates, dollar. And then we should also talk about gold, right? Because gold's been on one heck of a rally. I've been viewing gold as actually in somewhat of a cup and handle pattern, and that pattern has technically completed just the other week. So we popped a bit higher, but if you look at some of these candles, this is a very bearish candle on the daily, and on the weekly you actually have a doji. So I think that gold could be due for a bit of a pair back, but my assumption would be that we actually do hold the 2200 level. It's been so bullish. I think people are looking to get in, and if you're someone who believes that inflation's going to continue to stick around or even tick higher, that's my opinion. I think that a pullback to 2200 gets bought, and I think that it fundamentally makes sense, right? Even with the geopolitical risks potentially rising as well. So that's something that I'm looking at, but I think it's exhausted. I think it could come lower, and that's my opinion. So, but let's talk about big tech because, man, like I pointed out with the Nasdaq, it's still holding support. It's barely pulled back. The Mag 7 composite chart here, it's barely off its all-time highs. You're seeing how relentless the tech sector really is, and when if it starts to break, 2450 or so in this, that's when we can start to, take a look at the rest of the market and if this is going to be sustainable. But what I'm noticing is you have Facebook near all-time highs, just barely off all-time highs. It did respect this ascending channel resistance, and I also feel from a weekly perspective, it's at some major resistance as well, but it's still holding and it's still near all-time highs. And all-time highs mean momentum squeezes. So I'm just hesitant right now, given the fact that the S&P, equal weights pulled back 50%, the Dow's pulled back quite a bit this year. Maybe big tech just continues to remain bid, and like Facebook, Microsoft also is not far off from all-time highs. Now, I will point out from an hourly perspective that we are somewhat close to this support here at 419. I think if 419 breaks, then you might begin to see some downside in Microsoft, and it needs to get back above 432 to start beginning the bull session again. And I also noticed, let's see here. Well, if you take a look at our Twitter, you'll note that on Microsoft, which we update this throughout the week, I'm posting constantly to keep you guys informed. We actually hit 161% extension from the highs of 2022 to the lows of 2022. We're up here at 434, so that's massive, massive resistance. Okay. So maybe we could see some stuff, right? I'm playing a little bit of devil's advocate because this market's just been relentless. We saw a bounce in Apple this past week. It moved up 4% on the week, but I will point out that we're coming very close to this 38.2 here at 179, 180. And I think we actually tagged it if you took it from this high. So I think bounces up towards 180 in Apple likely get faded because I feel as if this is a bearish stock. And I think it's finally seeing some of this, wean off. And, you can see that this move right here on Thursday was just a total squeeze. It just stopped so many people out. It broke some resistance here, broke the descending channel resistance, and just mowed over shorts basically. But I do feel as if investors may want to start to lighten up on Apple if they get the opportunity up here. Amazon, another stock, also up near all-time highs, right? And you're seeing weakness everywhere else, and you're going, man, this should really be rolling over. Well, it's not. Sometimes what it's not doing will tell you more than what it's supposed to be doing. But I will point out, if you look left in Amazon, you're going to note that we're not far at all from previous all-time highs, and this could act as some resistance because you can tell here it got rejected both those times. Now, we did get just briefly above it and then reversed, which is a good sign for if you're somewhat bearish. I mean, it's hard to be bearish up here. But it actually rejected it. You saw a little bit of a gravestone doji on the 4-hour, but it needs to get back below 185 to get slightly bearish. Right now it is bullish. And then below 182, and I think we could test 172, which is a longer dated channel support. So that's something to be watching out for. Tesla tried to make a move this past week, but it failed in my eyes. It's still in this bearish wedge. It's held resistance at 177 or so, and I still feel, and I'm going to try to stop harping about it, but that we come down to 145 at some point, fill this gap back here, and then I would actually consider getting long Tesla, but that's just me. It's been the worst performing out of all of the Mag 7, and maybe if it gets down there, some people might start to raise their eyebrows and take a hit at it. But let's talk about the big guy, Nvidia. If you're trading the equity markets, if you're trading S&P, Nasdaq, you need to be following Nvidia. Nvidia was actually one of the first to start to break lower, but it didn't last that long. It's been in this descending channel as of late, and we were talking about it on our Twitter. 871 was going to be resistance, and we did break 871, and then we actually came and we got really darn close to that 50% retracement. So that, as of right now, is 908, 910. That's going to be resistance. You can also see it has a little bit of some horizontal resistance there as well. So that's something to note, but support's going to be back at 858. Now, if we get back in this descending channel, back below 860 or so, I think that's going to be bearish. But really, if we take out 830, and I think everyone, no matter what you're trading, should have an alert here at 830 on Nvidia, because if it starts rolling over, everything else is likely to follow. And I feel as if that would be a major development that you need to be keeping your eye out on. We're coming into a really interesting week given the geopolitical situations, and volatility is on the rise. You're going to want to be leaning on those you care about for information, and just trying to stay on your toes, because with this rising VIX environment, and just to point out from a weekly perspective, it's the first time we've actually closed above 17 since October of 2023, which was when we had that large correction. So weakness could be on the horizon. You want to keep your stops wider, your size lower, because you could see things squeeze a bit further than you might expect. I mean, I think a squeeze back up to 5,200 in the S&P is entirely doable, especially given the fact that we're actually getting some corrections. You're going to be wanting to pay attention to that, because in the event we get back above 5,200 and really above this trend line resistance, this market will be back on the bull. and sometimes it feels like nothing's really stopping it. So just be careful. But for now, like I said, resistance 5,200, support's going to be down at 50.50. This is the bull bear line for me at the moment. Pay attention, stay safe, and we will continue to update you guys as the price action continues. Thank you so much, and I'll see you all soon.